Ask me what I'm doing, just grinding. Haters wanna hate, let them hate, never mind them. Be more bins, tryna reach the next plateau. And I can't stop till I achieve my goals. Keep a couple fees inside the photos. So official with the vibe, you can't fuck up my zone. Hold on for a minute, let me count mine, you know.
Welcome to the Ultimate Wealth Podcast, the show where we unlock the secrets to financial empowerment and lasting prosperity. I'm your host, Derek Passalaqua, and together we're on a journey to transform your financial future and elevate your life to new heights. Join us each week as we dive deep into proven strategies, powerful insights, and transformative stories. Whether you're an entrepreneur, a busy professional, or someone seeking to create wealth and build a lasting legacy, this podcast is your go-to resource for achieving financial mastery and living a life of intentional greatness. This show is about more than just building wealth. It's about creating the life you deserve. So join us and let's build a future where financial freedom is not just a dream, but a reality. Welcome to Ultimate Wealth. Hello and welcome. This is Ultimate Wealth. I'm your host, Derek Passalaqua, and today we're going to dive into the topic of course, infinite banking. Today I want to talk to you about what the function of infinite banking is in your day-to-day life. So a lot of people look at whole life insurance in general, and they look at it and they want to just initially compare it right off the bat to other investments, right? They want to look at rate of return and say, I can get better than that in a mutual fund, in the market, whatever. And they're not taking a lot of other things into account. And first and foremost, I want to just say that infinite banking, whole life insurance in general is not an investment. That's number one, right? Okay. And the number two is that you can't compare a non-investment to an investment. That's not an apples to apples comparison, right? So that's kind of like comparing a savings account to a mutual fund. It just doesn't work. So that's not what it's not a real comparison. And then also number two is that whole life insurance gives you so many other benefits besides rate of return. Rate of return is just one of the many benefits in a plethora of benefits that you get with whole life insurance, right? So when you start to dissect all the different amazing benefits that you get, like creditor protection, you get tax advantage growth, you get tax-free access, you retain full liquidity, safety, guarantees, you can use it as a volatility buffer in retirement, all these different things. And then it starts to really stack up, and you can't necessarily assign a set hard value to some of these things. Like what's your rate of return on living benefits? You know, like what's your rate of return on being able to have that as a volatility buffer in retirement, so that when you have down years, right, you don't have to continue to pull from your investments, but you can let them recover and then therefore letting them last longer. I mean, they've done Dr. Wade founded study that literally where they looked at replacing the bond portion of your portfolio in a traditional 60-40 blend portfolio where 40% was allocated to bonds. And they showed replacing that with whole life insurance literally allowed you to end up with around 40% a greater return, because it's an enhancement to everything else, right? So it doesn't, one of the biggest problem, I think, just right off rip, is the fact that when people look at whole life insurance, okay, and when they criticize it, a lot of folks are doing so from the standpoint of it's like it's an or thing. Like they can either do this or that. So they can either, invest in the market, or they can do whole life. And when you're looking at it through that lens, you're already making a mistake. You don't get it. You're not understanding the value that it brings to someone's life, because it's an and asset. Right? There's literally the book, The And Asset, what that talks about. It's like a Swiss Army knife, right? It has all this different utility and all these different features and things, and it grows with you through each and every stage of your life. And it's a powerful, powerful asset class that's really in a class all on its own that can form the foundation of a solid, when properly structured and used, can form a solid foundation upon which you can build the rest of your financial life, right? You can build your whole life around this amazing asset that gives you all this different utility, all these different features and benefits. And when you look at it from that point of view, it's hard to really put a rate of return on something that does so much for you, that allows you to show up more powerfully, make more confident decisions. Actually, it's the thing that allows you to take more risk, right? So this is the thing in your portfolio, if you will. It's a place to store and control capital that allows you to then take risks in other places, allows you to invest in yourself because it can serve as the financial backstop for everything else that you do. And it at the end of the day, it gives you more options. It doesn't, and control, right? So typically more options is a good thing. Now, when it comes to the rate of return piece, an investment in the stock market, a mutual fund, whatever, you should get a higher rate of return because you're taking on more risk. So, and I'm not saying more risk always equals more return, but in the investing world, it certainly should. So anytime you have higher exposure to risk, you should have a higher upside potential. But the whole point of whole life insurance isn't so you can have this amazing upside. It's literally so that you have a foundation, a guaranteed growth, and the ability to use the policy throughout your life for different things, because we've got to save money somewhere. Okay, so you're either going to save money in a bank or a shoebox, whatever. You have to save somewhere. So that's why what we recommend, you set aside a minimum 3 to 6 months living expenses, whatever that number looks like for you personally. Everyone's different. Okay, and then anything above and beyond that now becomes an opportunity fund for which we can really we can invest in ourselves, we can invest in our business, we can invest in other businesses, we could literally invest in the market if we wanted to. My favorite thing to do is, I like a lot of my clients invest in real estate because it's a powerful real asset that they have a lot more control over, that most importantly, cash flows. Because the name of the game, and this is where we believe here very strongly that people kind of have it backwards when it comes to retirement. And the traditional financial advice would tell you that you should save, and then hopefully one day you have enough saved up that you can retire and live off the interest, and then pass on the rest, to the next generation or whatever. But what if, because if that worked like they say it does, then there wouldn't be outrageous number of baby boomers and other just people that have in the last however many years that have gotten to retirement and kind of been up a creek without a paddle, so to speak, because there wasn't enough. They weren't able to retire. It wasn't what they thought. They had been sold this big hype train. And then the only advice that you ever get is just hold on. It'll get better. Just hold. Well, I'm here to tell you that there is a better way that doesn't require you to hold and hope and pray for one day in the future when hopefully things work out. It's how much better and easier would it be to just simply change the way you're looking at things and look at it through a different lens and say, would it be easier to save however much the number is for you, $1 million, $10 million, whatever it is, or would it be easier to create the equivalent in cash flow, right? That's how true wealth is built. That's what you're really after. It's not the lump sum you're after. You're after cash flow because that's what is going to pay your bills and your living expenses. You don't care how big the pile necessarily is. You just want there to be available funds there when you need them. So what's the difference? Why does it matter if it's all sitting there in advance or if there's nothing there, but you have, and I don't mean nothing, I just mean not some big not nest egg basically, and you just have consistent, regular, predictable cash flow from real assets that you own. And it doesn't have to be real estate. It could be anything. It could be gold. It could be silver. It could be commodities. It could be whatever it is that you want it to be, whatever you're into, whatever you know, whatever you understand. It doesn't, like I said, there's not a right or wrong answer here. And that's the whole point, is just that we're not telling you specifically you should do this or that. We're just saying, we're literally just saying why maybe we should question if we've been given the right advice or not. And just ask the question, is there a better way? Is there another way? And then, is that way better? Who knows? Maybe for some people it is, maybe for some people it isn't. But the whole point here is that there's not just one way. There's not one right answer or one wrong answer. So, and that's what, like I said, traditional finance would have you believe that this is the only way to get wealthy. This is the only way to ever be able to retire and live the life that you desire. So that's kind of really the whole thing. And you got to stop looking, we got to stop looking at whole life insurance like it's either that or investing, because in my opinion, I think it's good to have both. Like I said, it literally is an enhancement. Participating whole life insurance from a mutually owned life insurance carrier, when set up and used properly, will enhance every other aspect of your financial portfolio. Like, there's nothing that it doesn't improve. It'll improve everything you have, because it is the foundation which you've built everything else on. It is guaranteed, contractually guaranteed. You have the ability to take advantage of down markets because you have your liquid, you have cash when a lot of people don't. You have the most efficient vehicle in the world for transferring wealth to the next generation. You creditor protection, you have living benefits. You have all these things that, when added up, there's, like I said before, there's literally nothing else in the world that can even compare to it, and not even close. I mean, like I said, if you want to compare apples to apples, then you have to look at a checking account or maybe a bond. But so if a checking account, number one, you have to pay tax on the growth, right? That's number one. But the whole biggest problem with any other asset, and I've argued people back and forth over this, but it's when you go to use the money that is in that asset, doesn't matter what it is, you stop the growth. You kill the compounding, right? Because now you're using it. Your money can either be here or there, but it can't be here and there. You can either have it in a 401k or you can have it somewhere else, but it can't be in both places at once. With whole life insurance, it can. It absolutely can be in multiple places at once. You can have it, and then that's the best part, is that, and if you know what opportunity cost is, then you understand why that's so valuable. Because when we pay cash for something, we like, go back to what Nelson wrote in the book. We finance everything we buy. We either pay someone else interest or we give up the ability to earn interest. And either way, there is a cost to everything. So the best way to mitigate that cost, and that this is why IBC uses whole life insurance, the best way to mitigate that cost is through using a whole life policy where you can not interrupt the compounding growth of your money. You can pay, you're going to pay regardless, but it's about minimizing that cost. So you can pay the insurance carrier to then borrow that money, and you're not borrowing your money, you're borrowing their money, and you're paying them interest. But then you can go and deploy that money somewhere else and get, hopefully you're deploying it somewhere where you're going to get cash flow. And that's the thing. You should, anytime you use your money from your policy, we like to see people only use it when they're going to use it for something that's going to yield you a greater result than the cost to borrow, right? So you want to be making a greater return than what it's costing you to use that money. And that's the whole point, the whole goal. That's what is ideal. And once you understand that, then you can see how you can utilize this in two places at the same time. It's and there's nothing else like it. And when you factor in that and then all these other things that we've mentioned, it becomes a no-brainer. But yet there's still people that will argue tooth and nail and try to disprove that it's not, I don't know, they try to make it sound like it's not real or it's not an actual thing, when in fact it is. It's widely known. There's not, tens of thousands of people around the world that practice this concept, including all the wealthiest family in our, families in our nation's history, don't practice the concept because it's BS or because it's a scam or because it doesn't work. So anyways, that's all. I just wanted to hop on, get on here for a second, hop on the soapbox and bitch for a minute. But I just wanted to drive home the point that you can't look at whole life insurance through the lens of an investment. You can't compare it to an investment because it's not. It's a savings alternative, a bond alternative, an opportunity fund, but it is not an investment. And when you compare it to like assets, like a checking or a savings account, something that is safe and liquid, which investing in the market is not safe and not liquid, then it is hands down, it blows the doors off of anything else that even comes close. So that's really all I was here to say. I've said it now. I feel a little bit better, but I appreciate you. Thank you so much for tuning in. If you're still with us, thank you so much. Hope you have a great rest of your day. My name's Derek Passalaqua. Again, I'm the founder and CEO of Legacy Guard Financial Group. If you want to learn more about the infinite banking concept or how it can be used and deployed in your life, you can check us out online on our website, mydebtfreeadvantage.com. You can, for free resources, you can join our community, ultimatewealth.mvt.so. Again, that's ultimatewealth.mvt, Michael Victor Ted .so, Sam Octopus. Or you can also just go to ultimateacceleratorblueprint.com. It's our membership site. All three are free. All three have a ton of great resources and provide a lot of value. So any of those, if you want to connect, you can find us on YouTube at Ultimate Wealth Pros. Same thing on most of our social channels. We're either at Ultimate Wealth Pros or Legacy Guard Financial. Again, Legacy Guard Financial Group is the parent company of Ultimate Wealth. So thanks again for tuning in. I appreciate your time. Hope you have a great rest of the day. My name's Derek Passalaqua, and until next time, live.
I can show you how to be strong. Come on, follow me. Heard you looking for a hero. Well, look up. No more running from the bad guy. I'ma stare him in the eye like, what's up? I know the journey got hard for a minute, but I ain't giving this up. Yeah, I got the heart of a champion. If I get knocked down, I get back up. We go through bad days, hard times, low pay, high crime, pathways to a life without sunshine. I'm the lifeline. With this life, I'm gonna be the pipeline, shining in the nighttime. Bet on me to swoop down. I'ma go toe to toe. Already know that I'm never gonna back down. Bet on me to stand tall. I take on anything for my crew. Bet I risk it all. Wicked, wicked.